All right, let's jump right in.
Yeah.
We're going deep into HCL Technologies Q3 2024 financials.
Oh, yeah.
You've given us like a mountain of reports.
Lots to look at.
We got their interim financials, their cash flow statements, even all these detailed notes breaking everything down.
Yeah.
Really, our goal is to cut through all this noise and get to the interesting stuff.
Yeah, I mean, I think right off the bat, what's interesting is this divestiture of their stake in the State Street joint venture.
Oh, that's a good point, because they netted, what, like $172 million from that?
Huge.
And you know that's going to show up in the profit figures.
For sure.
But before we get too ahead of ourselves, maybe we should take a step back and set the scene for our listener.
All right.
So who is HCL Technologies?
Right. HCL Technologies is a global IT and business services company.
Okay.
They offer a wide variety of services from like IT and business services, engineering and R&D services, and even like modernized software products.
And they're not just like working in one little area. Right?
No. They're global.
They're all over the place.
We're talking 116 subsidiaries around the world.
That's wild.
It's a lot.
116 subsidiaries.
But I think for now, we should probably just stick to the big picture.
Yeah, what's the big picture?
So their consolidated revenue for the 9 months ending December 31st, 2024 was $86,809 million.
Wow. And how does that compare to last year?
That's up from $81,414 million in the same period last year.
Okay, so that's a pretty significant jump.
Yeah.
And what I find really interesting is that growth is not just in one area.
Yeah.
It's across all their segments.
Yeah, they're seeing growth in IT and business services, engineering and R&D services, and HCL software.
That's really interesting.
It's a sign of a very healthy and diversified business.
I like that.
Yeah.
Healthy and diversified.
And it's not just revenue that's up their profit for those 9 months. Is $13,090 million compared to $11,715 million the previous year.
All right, so they're making money. They're growing.
They're doing well.
Sounds like a good news story so far.
And to celebrate their 25 years of public listing, they've even declared a special dividend of €6 per share.
Oh, wow.
On top of their regular interim dividend of 12.
So they must be feeling pretty good about where they stand financially.
It seems that way.
And you were talking about the notes earlier.
Oh, yeah.
Did you find anything interesting in those notes?
Oh, yeah. There's a bunch of really fascinating details.
Okay, fill the tea.
Well, for one, the way they handle foreign currency fluctuations is pretty interesting.
Okay.
As a global company, they have to have a really solid system for managing those currency risks.
Yeah, because even a small change in the exchange rate could really impact their bottom line.
Right. And I think another interesting detail is just the sheer amount of stuff they lease.
Oh, yeah. That's a good point.
We're talking about land. We're talking about office space.
They even lease employee accommodations.
It's really fascinating.
It is.
And with those new lease accounting standards, IFRS 16, it's really changed the way they report those leases.
Yeah, it impacts their balance sheet, so it's important to understand.
Yeah, and I think another interesting section is the other income.
Okay.
It's always kind of a fun little treasure hunt.
It's kind of mysterious.
It is. So, we've got profit from the sale of property, plant and equipment, the impact of gains and losses on their mutual fund investments, even a category called miscellaneous income.
Miscellaneous income, what is that?
We can only guess.
Okay, well, let's shift gears a little bit and get a little more critical. We need to take a look at their approach to impairments and contingent liabilities.
So this is where we kind of see how they handle potential risks.
Right, exactly. And a good example of this is goodwill.
Yeah, goodwill. It's such an interesting concept.
It is. It's this intangible asset that's really tied to a company's reputation and brand value.
Right.
But how do you really measure that?
It's more art than science.
Yeah, totally. And so how does HCL determine if that goodwill has been impaired?
Okay, so their notes outline the factors they consider.
Okay.
Things like operating results and future cash flows.
So it gives us a little bit of a peek behind the curtain?
Exactly. And then there's this whole contingent liability situation with one of their subsidiaries and a VSIT license.
Yeah, that's that ongoing legal battle in India.
Right.
With the Department of Telecommunications.
So back in 2015, the Department of Telecommunications, or DOT, hit the subsidiary with a demand for $16 million.
Wow.
claiming they underreported revenue.
To avoid fees.
To avoid fees, exactly.
That's a lot of money.
And that demand later actually grew to $40 million.
Oh, my goodness.
But this is where it gets interesting.
Okay.
HCL, they took the case to the Telecom Disputes Settlement and Appellate Tribunal.
Okay.
Which is also known as TDSAT.
Right.
And they actually won the case.
Oh, wow.
The TDSAT completely set aside the DIT's demand.
It's a case closed.
Not so fast. The DUT...
They appeal.
They appeal to the Supreme Court, and that appeal is actually still pending.
So it's a real cliffhanger.
It is, and the outcome could actually have a pretty big impact on HCL's financials.
Depending on how the Supreme Court rules.
Exactly.
Talk about a plot twist.
Yeah.
So as we wrap up this first part of our deep dive,
okay,
what would you say is the main takeaway for our listener?
So we've seen that HCL is a company with huge global reach, really diverse operations, and a pretty strong financial track record.
For sure.
They're growing, they're profitable.
And they're sharing the wealth with their shareholders. There's always a but, isn't there?
There's always but that legal battle with the DOT is a big question mark.
Yeah.
It just reminds us that even when the financials look good, there are always these external factors
lurking in the shadows
that can come into play.
Okay, so welcome back.
Back for more.
Yeah, last time we got a little taste of like HCL's global reach. You know, they're diverse business segments and they're pretty impressive financials.
Yeah, we saw some good numbers.
We did. But we also uncovered a potential plot twist.
A little bit of drama.
Yeah, with that ongoing legal battle in India.
Right. You never know what's going to happen with those.
Yeah, it's a good reminder that even in the world of finance, like things aren't always
black and white.
Yeah. Black and white, exactly.
Lots of gray areas.
So, for now, let's maybe shift our focus to something a little bit more concrete.
Okay.
Cash flow.
Cash is king.
Cash is king, exactly. Yeah. Because a company can be profitable, you know, on paper, but they could still be struggling if they don't have enough cash coming in.
Right.
So how's HCL doing in that department?
So their consolidated statement of cash flows is actually looking pretty good.
Okay.
Their net cash flow from operating activities for the 9 months ending December 31st, 2024 was $1,780 million.
Okay. And how does that compare to last year?
So that's compared to $1,722 million in the same period last year.
Okay, so that's a pretty decent jump. Yeah. And it suggests that their core operations are generating
strong cash flow.
Yeah.
Which is a really good sign.
It means their business model is working.
Exactly. They're effectively converting those profits into cash.
Right. But, of course, a company doesn't just sit on a pile of cash.
Right, they got to use it.
They use it to invest, to grow, to pay dividends. So where's HCL directing its cash flow?
Well, we saw with all those leases, they're definitely investing in property, plant, and equipment.
Yeah. Got to keep the lights on.
Exactly.
Keep those servers humming.
Acquisitions are another big one.
Oh, yeah, that's right.
You know, as you mentioned earlier, acquisitions are a big part of their growth strategy.
And let's not forget about that nice special dividend they announced.
Oh, yeah.
That's going to require a chunk of change.
It is, but I think overall their cash flow statement is telling a really positive story.
Okay, what's the story?
They're generating enough cash to cover their investments, to reward their shareholders, and they're still maintaining a really strong financial position.
Okay, speaking of financial position,
no
deep dive would be complete without taking a look at their debt profile.
Okay, how much debt are they in?
Right, are they swimming in debt?
Are they playing it safe?
What's the story there?
So they have a mix of short-term and long-term debt.
Okay.
Which is pretty typical for companies.
Yeah.
Their total borrowings as of December 31st, 2024 were $261 million.
That doesn't sound too alarming.
No, not really, especially when you consider the size of their operations.
Right.
You know, their debt-to-equity ratio is actually quite low.
Okay.
Meaning they're not overly reliant on borrowed funds.
Okay.
So they have a healthy balance between debt and equity financing.
And remember those senior notes they issued back in 2021?
Oh, yeah.
With that 1.375% interest rate?
It was a good deal.
It was a good deal.
And then they strategically bought back a good portion of those notes in 2023.
Okay.
Which actually reduced their overall debt burden and their interest expense.
That's a really smart move, especially with interest rates.
Yeah. Especially with rising interest rates globally.
Rising globally, yeah.
It shows that they're being really proactive about managing that debt.
Yeah.
And they're taking steps to mitigate those financial risks.
Smart.
Yeah, and it kind of brings us to a topic that's on everyone's mind these days.
What's that?
Cryptocurrency.
Ah, yes, the Wild West of finance.
Right. It seems like every company is like jumping on the crypto bandwagon these days.
So is HCL throwing their hat in the ring?
Are they mining Bitcoin in their server rooms?
Yeah, what's going on?
Well, based on the information we have, it seems like they're taking a much more measured approach.
Yeah.
There's no mention of any significant investments in crypto assets or any plans to really roll out crypto-related services.
Which honestly makes sense given how volatile the crypto market is.
Right. It's still a relatively new and unpredictable asset class.
Totally.
So I think for a company like HCL, it's probably prudent to just kind of observe how things evolve.
Yeah, see how the landscape changes.
Before making any major commitments.
So they're keeping their options open.
Yeah.
But they're not betting the farm on crypto just yet.
Not yet.
Okay, well, that brings us to the end of part 2.
Okay.
What are some key takeaways that our listeners should be thinking about?
So we've seen that HCL is generating some really solid cash flow from its operations, which is allowing them to invest in growth, reward those shareholders, and keep that debt under control.
I like it.
And they're also, taking a very thoughtful approach to those emerging trends like cryptocurrency, choosing to observe rather than dive in headfirst.
I like their balanced approach.
Yeah.
And we are back.
Back for the final round.
The final part of our HCL Technologies deep dive.
You made it.
I know we've covered a lot already. We talked about their financials, their cash flow. We even dipped our toes into the crypto waters.
Right.
But there's always more to a company's story than just,
numbers.
Yeah, than just the numbers.
There's a lot.
So let's see how HCL measures up in these areas.
Okay.
We hear a lot about ESG these days.
Environmental,
social,
and governance.
And governance factors, ESG.
It's a big deal.
It is a big deal. And HCL has been making some noise about, reducing their carbon footprint and all of that stuff. But are they actually
Are they walking the walk?
Walking the walk, or are they just talking the talk?
Right.
What's really going on?
Well, they've actually received some pretty significant recognition for their sustainability efforts.
Okay. Like what?
Well, for one, they were included in the Dow Jones Sustainability Index.
Oh, wow.
Which is a pretty big deal.
It is.
It means that they're meeting some really strict standards when it comes to environmental and social performance.
So they're not just greenwashing.
Yeah.
They're really putting in the effort.
It seems that way.
And it's not just about, reducing their own impact either, right?
No, they're also working with their suppliers.
Oh, okay.
To kind of promote sustainability throughout their whole supply chain.
Because it's a bigger picture.
Exactly. It's not just about them.
It's about everybody.
It's about the whole ecosystem.
Exactly. Okay, so we talked about the E in ESG. Let's talk about the S.
Social?
The social aspects.
Right.
HCL has a massive workforce.
Huge.
We're talking over 200,000 employees worldwide.
Global workforce.
So how are they managing all those people? And how are they creating a positive and inclusive work environment?
Well, they've actually been recognized for their commitment to diversity and inclusion in the workplace.
So it's more than just hitting some kind of diversity targets or whatever.
Right. It's about creating a culture where everyone feels valued and respected.
Because a happy workforce is a productive workforce.
Exactly. And, happy employees are more likely to stick around.
Yeah, lower turnover.
Reduce those turnover costs and you build a stronger, more cohesive company culture.
Okay, so let's shift gears a little bit and look ahead.
Okay, to the future.
To the future. What's HCL's outlook? Are they predicting smooth sailing, or are there storm clouds on the horizon?
Well, predicting the future is always a bit of a gamble.
It is.
But HCL seems to be pretty optimistic about their growth prospects.
That's good.
Yeah, they're seeing strong demand for their services.
Okay. In what areas?
Particularly in areas like digital transformation, cloud computing, and cybersecurity.
Those are all really hot areas right now.
Everyone's trying to figure out this whole digital world.
Right, how to move to the cloud.
Secure their data.
Yeah, exactly.
It's a big challenge.
And it seems like HCL is in a good position to capitalize on those trends.
I think so. They've been investing a lot in building up their expertise in these areas.
Yeah.
And expanding their service offerings.
And they're not afraid to use acquisitions?
No, they're not.
To grow?
Yeah, strategic acquisitions can be a really powerful tool.
Yeah, but they can also be risky. Integrating different companies and cultures.
Good stuff.
Can be a real challenge.
It can be, but HCL seems to have a pretty good track record.
Yeah.
When it comes to acquisitions.
They seem to choose their targets carefully.
Yeah, they're not just buying up everything they see.
Yeah.
They're focusing on companies that really complement their existing strengths.
Okay.
And, open up new markets.
Right, or new technologies.
Exactly.
All right, so as we wrap up this deep dive into HCL Technologies, what's the final verdict?
The final word.
What should our listeners be taking away from all of this?
I think it's safe to say that HCL is a company on the move.
Yeah.
They have strong financials, solid cash flow,
Yeah.
and they're managing that debt really effectively. But I think what's really impressive is their commitment to sustainability, their focus on creating that positive and inclusive workplace, and their really strategic vision for the future.
Yeah, they're playing the long game.
They're not just thinking about the next quarter's profits. They're investing in their people, their planet.
And their future.
And their future.
And that's the kind of company that's going to thrive.
Exactly.
I think we uncovered a real gem here.
I think so, too.
So we'll wrap up this deep dive here. We hope you found it insightful, informative, and maybe even a little bit inspiring.
A little bit of inspiration never hurts.
Until next time, happy investing, everyone.
See you later.